Welcome to For the Record. I'm Ellen Braitman. I'm at the estate of legendary hedge fund manager Michael Steinhardt outside New York City. Steinhardt has a zoo. He has extensive gardens.
It's a vision of having a place that is joyful, that is a pleasure for children, my children, other people's children, to come and find something natural and appealing, and while being very close to the city, being totally apart from anything like the city, that somehow captures as best as one can an environment that is in many ways not natural, something that really creates a feeling of naturalness.
Before he gave me a tour, we sat down and we talked about the economy.
Well, sentiment is better. I mean, by almost every measure, sentiment is considerably better. It's not effusively bull market better, but relative to where it was a few months ago, it's a great deal better. But my sense is that we've had a terrific rally. We've had a vast amount of stuff, dollars, injections of all sorts of things into the economy, TARPs and other new programs. And their ultimate effect is hard to know entirely at this point, but my sense is that this will not change the course of what is going to happen very much, that the economy is weak, it will remain weak. Whether we've seen the weakest moment, whether we're going to decline at a lesser rate, well, that may be true because the rate at which we were declining was so precipitous, but I'm not sure that's good enough. And my net feeling is that this rally doesn't have all that much more to go, does not have much more to go, and the dangers out there remain consequential.
Dangers specifically in terms of the economy, and what specifically? Are we talking consumer spending, or are we talking jobless?
The dangers in the economy are most everywhere. The numbers of jobless will grow. Will they grow at the rates they have been growing? I'm not sure, but they will grow. The auto industry, for instance, has a lot of people to shed. The auto parts and other related industries, the dealerships, you go on and on and on, but that's just a small part of it. There are all sorts of areas that are going to lose people. And it's only, I can't say it's only begun, but it's nowhere near at its end. Consumer spending is in a different mode. We are, I think, beginning a period where savings will take a different perspective in the hearts and minds of the American consumer. So I think savings, which of course have grown a great deal, will continue to be higher than they have been for the last decade or so. So there too you'll see an impact in consumer spending. So even if the economy picks up, and it may pick up at some point, it will pick up at some point, but I don't think it'll pick up in the same robust way that it has traditionally at the end of some recessions, most recessions. But it will pick up, but not as one might hopefully have expected.
All right, in terms of most investors, and I suspect a lot of people who meet you these days ask you the question, I'm 45, I'm 55, I'm 60, I've lost half my money over the last 18 months.
Right.
What do I do?
A serious question. It's particularly a serious question when you get a fraction of 1% in treasuries. Well, I mean, if you're asking me what one should do with one's money now, I'm not sure you asked that question. I don't have a clear answer. What I would say is that if one is young enough and has money that is truly spare, I think one can be, at these levels, a long-term investor in relatively high-quality shares as represented by ETFs or some other methodology. One should not assume the illusion that you or your corner stockbroker can pick stocks, because probably you and he cannot, but you can make a bet that the stock market from these levels over a long long period of time should probably do as well or perhaps better than other forms of investment as they have in most periods. That's not an unreasonable thing to say. If you're older or don't have all that much money or are less secure, I don't think you have the luxury of doing that, and you probably have to swallow deep and go into some intermediate bond of considerable quality and settle for 4, 5, 6%, something like that.
Who knows what quality is these days, though?
That's a very good point. And those wonderful creatures called rating agencies, who are another institution that should really have been ashamed. And in another environment, sometimes I think that if we were in old-fashioned communist Russia, they would have taken the rating agencies out and shot them. They would have taken some other people on Wall Street out and shot them because they committed such crimes and hurt so many people. But it wasn't viewed that way. It was a different world.
So long term, you think stocks are still at this level where we'll outperform? I do want to acknowledge first, though, I spoke to you in February 2007, and you said off in the distance, Sam Zell had just sold Equity Office. It was the height of private equity investing and takeovers, and you said off in the distance, I'm starting to hear the toll ringing.
I remember that, yes.
As we know, what happened. So, what about now?
The facile thing to say, and probably the right thing to say, is that we've hit a bottom. And it may be a long time before the economy goes on full throttle again, but that we've hit a bottom. The reason I'm hesitant to say that is that there are so many issues in the world that I find discomforting, at the risk of burdening you and your viewers. Something really bothers me about the moral climate. And I think that has to change. And I don't think Obama has done that. And somehow, I think the American individual, the American investor, the American consumer, has to feel really good about his future. And Obama, in some sense, has moved some people toward feeling good, but the way in which they feel better is in an anti-capitalist way. I mean, it's not that the sense is he's come on and we're going to go back to the old ways. It's some hint about some real changes. You know, this great focus on change. And what will the change be? How will it be? We've seen a lot of storm and drang, but how it will ultimately wind up, I'm not sure.
What's the harder thing to say, right? You're a contrarian, it's how you made your career, it's how you can still consider yourself. So what's the twist?
The harder thing to say is that there is a deep-set dissatisfaction with the system as it presently works. And at the same time, we don't have the courage to really accept short-term pain. To make something of this debacle, it seems to me you had to do a lot of things really differently. And I'm not sure we accepted the tough things that might have had to be done to really reinvigorate the American economy.
I want to talk stocks. Long-term good investment, how quickly, if we're at a bottom, potentially, but the economy's still bad, how quickly could we see some kind of gains?
We have seen gains.
Meaningful, sustained gains.
Markets up 40 or so %. I do not see sustained major gains from here for a while because I find it difficult to see the consumer getting out of his present circumstance for a while. I mean, housing is terrible. It's seen the worst, but is it going to get better for a while? I mean, I see all sorts of issues muddling for a while. Now, can the stock market do well in a muddling period in the economy where at the best it grows at 1% or 2% for a period of time? Maybe. but it's not a period where you see an effusive stock market. So I would say that can you do okay? Can you buy food companies and make a reasonable return? Can you find some underpriced stocks in some areas? But you're asking me for the sort of magical returns that have existed in times past. Well, guess what? You got magical returns in the last 2 months. Magical returns. Bank America was trading at 3 a couple of months ago. They just sold a quadrillion shares at 10. How many times does that happen? I mean, that's quite a return for a couple of months.
All right, treasuries.
So you have it. Treasuries are just too low. I mean, they're unexciting. And again, one can't but imagine that, and it's too easy to imagine at some point, the government, which is the largest debtor in the world and will continue to issue vast amounts of additional debt because it has no choice, at some point that pressure raising interest rates. So to be a long-term investor in treasuries at this point, I think is foolish. The rates are low and the danger is high.
There's a disconnect in the credit markets and the stock market. The cost, banks are willing to lend to each other, again, for overnight money, and that rate has come down.
Yes.
Longer term, though, the stock market is nowhere near that, right? So on LIBOR, you're at pre-Lehman rates. The stock market, you're nowhere close. Why? What's the disconnect?
The disconnect is the confidence in the economy and the confidence in the markets and the confidence in the credit system, which is coming back in a tepid sort of a way. And it will continue to come back in a tepid sort of way. The banks, in case you haven't heard, are less than healthy. And they're being very, very careful in their lending, and there are all sorts of issues remaining in the banks that will surface and will continue to restrain their lending. They've come from a period when they were promiscuous. Is that a good word? And if you're promiscuous for many years, you're probably going to be, what's the opposite of promiscuous?
Chaste.
Chaste for quite a period of time, and we're in the period of chaste.
I don't think I've ever said chaste when I've been talking about investing. Let me just briefly get your view on the dollar.
The dollar is vulnerable. And the problem with the dollar being vulnerable is that 97.3% of the observers feel the same way on a long-term basis. So I ain't saying nothing that you ain't heard before.
If I remember correctly, one of your long-term concerns has been the deficit. What does that mean for us?
Well, I haven't been so concerned per se about a deficit that grew gradually and for some period of time even disappeared. But what we're experiencing here is a vast increase in the deficit in a very short period of time, which requires a huge amount of government money creation and gives many people the sense that the dollar is very vulnerable, that inflation is, if not around this corner, around some corner, and gives one the sense that on a long-term basis, who knows? Now, and that's the right answer. Who knows? All sorts of people make the case that that with a deficit beyond anything we've ever dreamed and money creation beyond anything we've ever known, invariably, inflation will be a result. It's a matter of when. Well, maybe that's right, but there are all sorts of other factors that aren't really being considered. At some point, I think they have to do something to deal with the deficit. You know, it used to be called tax increases, but we'll see. So I think to make long-term projections, even those that superficially are obvious, that there's going to at some point be a terrible increase in inflation, the dollar is very vulnerable, it's obvious and understandable, but I think not as clear as it may seem.
As Steinhardt drove us around his 52-acre estate, he mused about the moral implications of the crisis.
Perhaps it's easy, and maybe I should guard against being moralistic, because when I was doing it, I, at times, went right to the edge. I've left the business now. I'm out of the business in terms of managing other people's money for almost 15 years. I, for a long time, asked my friends on Wall Street the question, who are the villains of this? Is there something to be learned from this experience? If this will have been the worst economic debacle since the Great Depression, well, why did it happen? And I think there is a hodgepodge of answers at the moment, and a hodgepodge of an uncertainty as to time frames. People talk about the 90s and Glass-Steagall and issues that relate to a few congressmen and Fannie and Freddie and failed brokerage firms and individuals who ran some of those firms. But there's no one yet who really places a finger on anything. You can broadly say greed, but the greed is no greater, or was no greater, it seems to me, than at any time in a capitalist economy. You know, remember that wonderful film on...
which I think they're making a sequel to.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good.
Greed. I mean, greed's a funny word. So all that, I don't think has at the least created clarity. But what it has brought up is that Wall Street basically is trying, I think, in some ways to reestablish itself. And I don't think there has as yet been a moral lesson for the people in the business. I think that it has soured many people from coming into the business. The number of people who want to go into teaching and other areas who might heretofore have thought about going into Wall Street is probably considerably greater. And there is that change. But somehow, some of the real ugliness that has always been Wall Street remains. For instance, the private equity world is an ugly world, in my view. It's an ugly world because it seems to me that a considerable number of the managers don't put their investors first. Let me repeat that. When you're in business, when you are in business where you are supposedly being paid a percentage of the profits, where when I did it, I was paid entirely based on a percentage of the profits. And if I didn't make profits, I didn't make anything. There should be a motivation to overwhelmingly please the investor. I used to say that I lived my investment life in anxiety, feeling that I was a servant to my investors. The people who do this don't feel that way in the slightest.
Are there specific companies or people you'll talk about who you think are really good examples of this?
Well, yeah, there are some specific examples I might talk about. I might talk about those people who dealt with New York State and who paid off people to get New York State's money. Something really ugly about that. And while the Attorney General of New York State squeezed some fines out of some of these people, it wasn't enough. In my view, those people should have been thrown out of the business because they did something terrible. And the terrible was that they paid off third parties to get money. With whose money did they pay it off? In essence, with their investors' money. And the priority they put for earning the best possible return for their investors was secondary or tertiary for their growing their assets. And I think that's wrong. And I think it's a common phenomenon in the private equity business. I think the private equity business doesn't adequately report. I think that some of the statements made by some of these people are near lies. There's a different sense than there is with the institutional investor writ large. The individual investor really cares about his money. He only has so much, and if he loses it, doesn't necessarily come back. It's with the institutional investor. It's not his money, it's somebody else's money. He tries to do the best job he can, and he gets paid perhaps for doing the best job he can. But if he's a state pension fund, does he get paid very much differently based upon his performance?
But you yourself, I believe, got trapped in this. You personally, you know Bernie Madoff.
No, I don't know Bernie
I thought
Madoff.
you knew Bernie Madoff. I
know
apologize.
Ezra Merkin, but not Bernie Madoff.
And you had some exposure, though.
I had a modest exposure.
To Madoff through Merkin. So you actually,
Correct.
I don't know, knowingly or unknowingly, actually invested through an intermediary.
Yes, I invested through an intermediary fund, through a fund of Ezra Merkin's that itself invested about a quarter of its assets in Madoff.
Right, so you fell into the trap because you're talking about that it should be a direct investment, that you should know the manager.
Well, I did and I didn't. Firstly, let me say that I know Ezra Merkin very well. Very well. And I had invested with him for a long time, and he had a consistently above average record for a long time. I did not know he was investing with Madoff. If I had known he was investing a portion of the funds with Madoff, I'm not sure that it would have bothered me because I did not know Madoff. But I did know Ezra Merkin, and I had faith in Ezra Merkin because he had a solid long-term record. So my prior statement may not be entirely applicable because Ezra Merkin is someone I knew as a friend, and therefore it was not a distant relationship.
So how has the whole meltdown, and also I'm curious to know how it's changed post-Madoff, your view changed in terms of what hedge funds you're willing to put your money into, right, to hand off your management, as opposed to the decisions you're directly making yourself?
Well, I think hedge funds have a place, but I think the place should be constrained to those who really have shown or have the potential for truly superior investment results. And I mean truly superior investment results. I can't emphasize those terms. When I was doing it, if I had a down year, I was ready to commit hara-kiri. A down year. I mean, I used to say to my investors, we should make no less than 15% per year and never lose money. Well, we did lose money. Once very badly and once or twice marginally out of 29 years. But the idea was, because we were, pardon the expression, hedged, we should not lose money. I don't think the genre of hedge funds today with 8,000, 6,000, 10,000, I don't know how many there are, have that philosophy. I don't think they have the high standard. I think they have gone into a whole range of specialized nuances, some of which are value, some of which are nonsense in my view. But they don't achieve superior performance as a genre, but they charge superior compensation fees, and the investors who once were defined as sophisticated ain't sophisticated anymore. The hedge fund managers that I still have are terrific. They're people I've known for an extensive period of time, people who are reliable, decent, hardworking, with no exception. They take their business seriously and take losses with pain.
So one of the government programs is to make these loans to private investors who are going to buy toxic assets.
Yes.
Talk about that.
I don't have really very much to say. It's a peculiar phenomenon where the government is focusing on a group of investors, a very specialized institutional group of investors, and giving them an opportunity. It's as if we're still part of an insider world. that these are the people who can do this, that the investing public writ large can't do it, or these people can best represent the investing public, but I don't think they do. So I find it just, the whole thing, a little bit peculiar. And I find that it is a continuation of a period on Wall Street that was not a happy period. That was not a happy period for most investors. I mean, one might, at some point, do a sociological survey of the attitude of the individual investor. You know, the investor who used to go to Merrill Lynch and went with that theory, investigate before you invest, or other things like that. Where are they now? What do they think about the stock market? Do they think it's a fair game? Do they think they should continue to do it?
While Michael Steinhardt still has his hands in the markets and focused on the economy, he spends the bulk of his time focused on philanthropy, his gardens, as well as his zoo.
This is the aviary, where we have 200 or so different birds, mostly ducks, teals, geese, some pheasants as well, some unusual guinea hens. So what you see here are all sorts of different creatures. Some that like to stay in the water, some that jump from rock to rock. They're from all over the world. We have this wonderful stream that runs through the aviary.
You're very engaged with the animals.
Very much. I know most of them. I identify them. I get great pleasure. For instance, just to look at some of them are so beautiful. An Argentine ruddy duck.
How many years has it taken you?
20 plus years. But it never ends thrilling me. We still have some birds that we don't have that we'd like to have. I keep using the word joy because that's what I feel when I'm here. I feel excited. I have all sorts of animals that very few other people know even, much less have. So it's interesting for them to see them, to look at them, to see what nature is really like. And then when they see a creature like the one that's walking up the hill now, they're curious as to what that thing is and why he's here and why he doesn't fly away. I need 1 or 2 females who are going to help me dance with this crane. Put your hands out like this, pretend you're a bird. There she goes. Come on, up and down. I should jump a little bit.
She likes the camera. For the record, I'm Ellen Braitman.